So what according to you is a fundamentally strong business? And if any, say, startup founder is listening to us right now, what would be your advice to him or her?
To expect startup founders to be profitable from year one, year two, even brick and mortar traditional businesses cannot be profitable from the first couple of years. And especially if someone is building on an idea, that idea takes multiple iterations. It takes multiple experiments, soft pivot, hard pivot to actually arrive at a model which works. And in our VC world, we call it PMF or product market fit. So unless that is achieved, it's unfair for founders or for investors to say that, look, be profitable as soon as you start. It's not possible. Any businesses require at least 1,000 days to prove themselves. It takes a massive deep dive research, primary and secondary, and sometimes the founders don't have the patience, and the motivation needs to be at an all-time high for anyone to say that look, I am going to go through this entire 200 pitch calls to investors to get that two believer to come and invest in my business.
क्योंकि climate ecosystem is really new right now, so probably अगर हमारे पास एक database होगा सारे thesis का, so do you feel कि ज़्यादा impact आ पाएगा where VC firms are collaborating amongst each other?
We actually can't afford to have a competing environment around us, especially in a subject like climate, where even I don't know everything. Being a climate investor, I'm also learning from my investments that I've done, from whatever impact that they have created, and obviously what are the examples in the market to see what folks are building. If we are able to in some way or form collaborate with funds, like-minded funds, I think it's definitely a huge advantage to work harmoniously. For India to become a hub for climate investments, it's so important right now, all of us to co-create policies, co-create informal discussions, do stuff what we are doing right now. I mean, it's an incredible job that you're doing. I think this is the only podcast that I know which actually focuses on climate as a subject. This is what we need right now.
Hello everybody, welcome back to another episode of the Climapreneur show. Today on the podcast, we are speaking with Ankit Kedia, the founder of Capital A. With him, we really try to explore that what does the climate investment ecosystem today looks like. We have been always hearing that climate change is the biggest economic opportunity as well as the biggest business opportunity as well, because we are sitting at the edge of reinvention. So everyone and anyone who becomes a part of this space would have a massive opportunity to be a part of a transformational era. So with Ankit, let's really try to understand his work and how does the entire ecosystem looks like. So Ankit, thank you for being with us here today, and thank you for, sharing your insights on the podcast today.
Pleasure to be here.
So Ankit, I would first like to begin with that. Please tell us कि Capital A क्या है? What does Capital A do?
Capital A is an early stage venture capital fund based out of Bangalore. We started Capital A 2 years ago with a clear purpose of investing in sustainable businesses. Obviously, the theme of sustainability has been developed over the last 12 months or so. But what I mean by sustainable business is business which have very strong fundamentals, have a very clear financial goal to achieve, in that entire journey of the founder, whether it's scale of revenue or path to profitability. Idea was to sort of get into this space with a slightly different angle of how businesses should be run. And yeah, that was the somewhere around June 21 is when we started. We carved out about 250 crores from the family office to start Capital A. This is a 100% prop capital, which means we at the moment do not have any external LPs or external investors.
When you say LPs, what does that mean?
So limited partners, typically folks who contribute to a VC fund's corpus, and then the fund manager at a VC fund usually deploys it in startups. So this gave us a massive flexibility on curating our portfolio, choosing our founders and businesses that we want to invest in. and has been a tremendous journey so far.
So quickly, like, explain to me what is a VC firm and how does a VC firm operate?
I mean, typically, if you have any businesses to run, there are 2 or 3 options to run that business. A, with your own capital, if you have inherited capital from your family, your parents, or you have money to run your own business, you do that. Otherwise, there have been banks that have been available for thousands of years to lend you that money. And then comes the entire private equity, venture capital, angel investor, folks who invest in high risk businesses, and in a hope that it actually gives you a favorable outcome in terms of that multiple X's of return. Typically, VC firms underwrite a risk of a large addressable market, a very solid founder to execute their vision, and someone having absolute clarity on what they want to do. I think typically VC firms love to invest in great founders, great markets, and obviously look for an exit,
Yes.
either via a IPO or a strategic sale to another company, or it could be taken up by some growth stage funds.
Interesting. So would you say that all your founders like are highly ambitious founders and they're really clear with what they want to build?
Right.
So, Ankit, because you mentioned that VC firms generally invest into, higher risk spaces. So seeing the climate scenario, do you feel that climate ecosystem today is a high risk space? Because we always hear कि climate change में बहुत opportunity है, and we have
Right.
like so many articles flooding, be it from Forbes or from any leading publications, that the next decade would be for the climate decade. So is it high risk space?
I think it's a two-way dagger from a lot of perspectives. The reason why climate tech or investing in the climate space has been historically viewed as a hard bet or a hard investable business is because not too many people understand it. Also, the awareness around climate has only started very recently.
Just to cut you here, when you said that not too many people understand, when you said not many people understand, is it that the investor doesn't have the thesis for the business, or is it the other side of the story?
I think the entire space itself, because climate can be a mix of hardware, deep tech, and tech. Now, in the last 2 decades, we have seen the evolution of tech and the rise of tech in a manner that, it's unprecedented, right? So, folks have always gravitated towards investing in tech startups. You have the technology to support the startups, or a startup is built around a certain tech. There could be other layers of a service or a product, but tech becomes like the fundamental premise on which the startups are built. In climate, that could be a 50-50 at times. So, for example, someone building a hardware company which will enhance the productivity of, say, solar PV panels. Now, there is no technology to be built. There is no IT to be built around it immediately. The first objective of the founder is to build that product out, test it, get results in. The tech can be an enabler. And I think sometimes because of what's been covered in the larger media so far, and the stories of so many unicorns coming in, there's become a little bit of a prejudice where climate folks find it slightly hard to attract VC capital. Thankfully, a lot of that is changing right now. World over, you have US and Europe, which are fairly evolved markets where investors clearly have a strong thesis on investing in climate. I think India, we are just scratching the surface. A lot of VC funds are focusing on thesis building. Yes, as we evolve, there are going to be some hits, there are going to be some misses. But I think the bigger picture is, climate is here to stay. It requires a very deep understanding of how climate is defined or climate tech is defined for anyone to sort of believe and get comfort around it.
And like as you said that the space is new, but I was also reading this one report, as I mentioned, that was from Palki. And she was mentioning that, at this moment, the startup ecosystem is struggling. The fundings are down by 75%.
Yes.
I think last year it was somewhere around $11.8 billion. The first quarter, startups raised that much amount, but this year it's 2.8 or $2.9 billion in the first quarter. So how do you view this in the climate space? Because the funding come ho rahi hai. Why is it that the investors are tightening, the money, or like why is this happening?
See, obviously, we all know about the macros, which are sort of leading to this crunch or the so-called funding winter. Definitely the Russia-Ukraine war, the slowdown in the European and US markets, or UK for that matter. The global economy, the global macros are definitely, the sentiments are down over there. And for that reason, a lot of sovereign funds that usually take large positions in emerging economies like India, China, Brazil, that's sort of coming down a little bit. And when that comes down at that scale, it funnels down to choosing the most safest investment. And so far, the safest of investments, historically, we've seen, there are a bunch of software companies, a lot of fintech, and subsectors of these two largely, which gets the first preference in terms of getting funded, and then climate sort of gets relevance over there. I have to agree that there is definitely a struggle right now in terms of a lot of founders not coming out with enough conviction and saying that, look, let me build this right now. There is a time, there is a place for everything. But folks who actually take the leap of faith right now to build it, I think the best time to curate a fundamentally business right model is the time right now. There hasn't been a better time because valuations have corrected. There are a lot of meaningful investors who say that if the valuations are right, if the founders are right, if the markets are right, and we foresee an outcome, or we foresee that the founders will be able to build something over the next 18, 24 months, let's go for it. To a certain extent, concepts of dilution, and valuation and all of that, that's fairly compromised at the moment. But I think looking at the larger picture for both investors and founders, it's an opportunity, I would say. And if entrepreneurs are ready to take the plunge right now, I think it's the best time, like I said.
And as you said that, valuations have been corrected. Do you feel that now is the time not for valuations, but for profitability? Because we see so many unicorns with valuations, but these are actually loss-making businesses. So what, according to you, is a fundamentally strong business? And if any, say, startup founder is listening to us right now, what would be your advice to him or her?
See, it would be unfair to the unicorns that already exist right now to say that, look, they haven't built any business, because some of them are, outright game changers. Global unicorns like Uber or Slice. I mean, folks like them, they have completely changed the landscape of, shared mobility and the fintech industry altogether. To expect startup founders to be profitable from year one, year two, even brick and mortar traditional businesses cannot be profitable from the first couple of years. And especially if someone is building on an idea, that idea takes multiple iterations, it takes multiple experiments, soft pivot, hard pivot, to actually arrive at a model which works. And, in our VC world, we call it PMF, or product market fit. So unless that is achieved, it's unfair for founders or for investors to say that, look, be profitable as soon as you start. It's not possible. Any businesses require at least 1,000 days to prove themselves. to get some leeway into the entire, uh, whether it's building out a product, building out a service, catching hold of the first 100 customers, and then to make sure that these customers keep coming back again to buy, your service or your product. It takes a bit of time. To circle back to your question, whether founders should uh, compromise on their valuation, I think they should. It has to be a balance, and it has to be a balance of expectations on both sides. If there is some way or form where investors and founders can say, let's come to an arrangement where you hit a certain milestone and it's good for both of us. We build a clawback in the agreement where you get to gain back your equity on, on hitting a certain milestone. That gives so much more confidence on both sides, and it's a win-win for both. But at the same time, due to the current climate itself, there are a few investors who will ask for some sharky terms, and at the same time, infuse that millions of dollars into the business. I think it's ultimately the founder's call to decide whether they need the capital at this time, or maybe do a short bridge or do an internal round right now. Manage with your internal investors for now, sort of tied through this next 3-4 quarters until things improve. Bridge rounds are trending, hashtag trending. And I think that's sort of the in thing right now. And if they are able to build this bridge unto their Series A, Series B rounds, I think that'll be a wise move.
Please expand what a bridge round is.
So a bridge round typically is anything between a pre-Series A or a seed fund to the next round. So, suppose a founder has a runway for the next 8 months and has figured out that, they need more money to grow right now, and obviously some insurance money to make sure some contingencies are taken care of. A typical bridge round would then mean, that extension of runway of that 6-8 months to perhaps 18 months or 24 months until they are able to attract interest of the next round investors. So basically, it's a safety net both for the founders and the investors to make sure the business does not suffer. Customers, keep coming back. The product development does not suffer. I think bridge rounds are extremely helpful to tide over situations like this, the slowdown that you're seeing right now. And founders so far have been able to tide over it quite successfully. Unfortunately, there are also many deserving businesses which have not been so lucky. But at the same time, it's a way of life. You hit some, you miss some.
Talking specifically about the climate startups, do you feel that climate startups find difficult to build revenue models? Like, is it hard to monetize in the climate space? Like, have you seen any such instances, and what are your thoughts? कि ऐसा क्यों होता है?
See, on the climate space, if you have to typically divide it into 3 or 4 spaces, you have energy, you have renewables,
Yes.
and then finally hardware, deep tech, right? I'll start with the hardware and the deep tech side. They're typically founders who come from engineering backgrounds, a very strong passion for building engineered products. It could be solving for anything which requires a machine to sort of solve it. They are tangible in nature. Founders are able to clearly describe that this hardware or this product will give you this result, and it's there for the investors to see. And then it's obviously a lot of analysis to decide whether there's a market for this and whether it will fit into the larger scheme of things. There, usually people don't find it so difficult to show that something exists. At the same time, the word hardware is a taboo sort of a concept in the entire VC world, because like I said, not too many people understand it. You actually need a bit of operating experience or an operator's lens to understand some of this deep tech hardware products that many founders are so passionately making. Coming to energy side, you have EV mobility. Now, EV and mobility, despite all the noise that you see in the media, and there are a lot of strong government-led policies pushing for EVs. But Shweta, the thing is, the penetration of two-wheeler is barely 1%. 1% in a population of India of 1.3 plus billion people is barely anything. And then to sort of anticipate that this will grow multifolds in the next 4 years, I think it's ahead of its time right now. And then obviously, people want to be optimistic, but they also want to be sure that they are investing in something which will give them the return. So on the EV and mobility, our thesis has been the entire supplement side of the EV, which are powertrains, battery, you have software, you have analytics. Even before you can design an EV vehicle, there are a lot of softwares to create digital twins to ensure that some of these products, even before they get executed on a tech side of things, you can actually figure out whether they are safe. You read about EV fires, you read about so many of these accidents that keep happening, and the best way to do that is to sort of create a simulation to ensure that this doesn't happen. Now, for anyone to understand the concept of a digital twin of an EV vehicle, the complexities of understanding it is multifold, right? Someone has to first of all understand the EV technology, then they have to understand the tech side of things, marry both of them, and then come out with a model where the investor feels that yes, it is investable. So I think typically climate folks have a lot of hardships in explaining what's to be done. I actually keep going back to one of my founder friends, Angad Daryani.
Angad is like amazing.
Right. So I invested in his company a few years ago, and in every meeting and in every investor update that I get, I keep telling Angad, stop sending such large investor updates, because man, you know what you're doing.
Yes.
We just need to know what you're doing at a surface level, but just come back to us wherever you need help. But the guy has so much passion in what he is building, and sometimes you should just sort of talk to him about his journey of raising that capital. I think it's so reflective of what an entrepreneur goes through in the climate space to raise that money, because there are a lot of and may not be a stereotype, but there are a lot of funds where there are folks who take time to understand this. They are right out of college or with a couple of years of experience in a field completely oblivious to hardware. It takes a massive deep dive research, primary and secondary, and sometimes the founders don't have the patience, and the motivation needs to be at an all-time high for anyone to say that look, I am going to go through this entire 200 pitch calls to investors to get that two believer to come and invest in my business. So on the energy side, you have folks who are solving for energy efficiency. You have folks who are solving for better use of technology. On the renewable side, there is solar. People are building, and again in solar you have financing. Solar financing again is one of the hottest subjects right now. And again, in a country where our penetration into renewables is barely anything, the first thing that most entrepreneur needs is financing. And financing usually doesn't happen by banks or private lenders. VC capital comes of enormous value to some of these founders, where they can actually build out fintech products to finance various renewable sources of energy. So, if you have to classify our climate thesis into energy, um, renewables, and energy, I also sort of include EV
EVs.
and ancillaries of EV over there, and renewables, and then of course deep tech. Deep tech, I think, is also something which is very fast evolving, and a lot of family offices who have built successful manufacturing businesses, who understand the operating side of things, uh, have been fairly successful either in investing directly or co-investing along with some other funds into some of these startups. I think it's a great time to be a climate entrepreneur. You just have to figure out the right product, right idea, and find the right set of believers.
That's true. And the way you talk about the product market fit, building your models. And I feel like with Angad also, he's a friend. So he was once telling me, I was telling that Angad, you're building something great, it's going to have like a big impact. And he was like, I just want, it touches lives and, it has like impact in terms of people's lives getting healthier. He wasn't talking about numbers. He was talking about the impact that he wants to have.
Absolutely.
And I was like, he has a vision in mind that he wants his product to impact so many people. And that really shows up in his actions. So I know that what do you mean when you say an ambitious founder who is clear with his goals. So, Ankit, because you have invested in, like EV sector, give me like some of your growth stories from your own portfolio companies, or like how it's for them in this space.
How's the journey so far for them?
For some of your portfolio companies. Or if you have any, say, interesting stories from their journeys, because you have been very closely tied up and associated with these companies.
I think I was very fortunate to sort of associate myself with this entire world of electric vehicles and the auto ancillary side of things sometime in 2020. Obviously, the first few folks we spoke with, it felt like a culture shock.
Culture shock? Why?
I come from Bangalore, right?
Okay.
And in Bangalore, it's a high-tech city, and you have all of the technology over there, and you have taxis flying from here to there. For the life of me, I could not understand that a e-rickshaw is one of the most preferred shared mobility means of transport in NCR.
Yes.
Right? And
huge
when I
lifesaver.
Absolutely. And when I spoke to this founder of an amazing company called ChargeUp, right, Varun Goenka, for the life of me, I couldn't believe that a fragmented market like e-rickshaw would actually be the first folks to switch from an ICE vehicle to a e-rickshaw or a EV rickshaw. And battery swapping would be one of the first use cases for it. Obviously, they have now moved far away from battery swapping, but at that time, it just seemed like the sensible thing to do. Their supply chain was sorted. Their, the network, the technology that they built to optimize routes, to optimize, the driver's presence in a certain concentrated geography. I think all of that was great. Fast forward 2 years, it's no more a business of building stations and swapping batteries. I think the founder's vision with a crystal clear impact for the e-rickshaw drivers. For him, the impact, just we spoke about, the impact plays such a big role, the purpose plays such a big role, everything else will follow. And, in the last 2 years, we have seen that company evolve from merely a battery swapping company to a much larger tech play right now. Similarly, there is another company called Urja, right? Urja is founded by Vineet, again, a veteran in the tech space, the digital twin space, where he was heading another Swedish company. Now, he wanted to build something to make sure that EVs are safe. EVs are, in a country where we have so much engineering dominance, so much science around us, why can't we be the leaders to design the best of battery packs, the best of battery management systems, the best of powertrains, and overall a great product. To build out such products, you need to simulate and you need to ensure that the product that you're ultimately building, sure, you can spend 2 years in building it out and doing your experiments, but there is a smarter way to do it, and that's through the tech. So I think he's also, when he started out, he had just this one module, and now as a product has come out. So what we have seen is we have been extremely lucky to see some of these founders who have built the business with a certain vision 2 years or 3 years ago. They have bloomed into such great opportunities.
Yes.
And funding aayegi jayegi, summers and winters will come and go, but I think if they get their fundamentals right, their purpose right, their clarity, courage, I think the consequences will be great.
I agree. I also think, but then like what I have seen in the climate space is you need purpose, you need, something that pushes you every day when, things are going wrong. That is definitely there, but also, understanding what the consumer wants. For example, who should be your end consumer? Like maybe your product is for, say, a driver, but a driver might not be your end consumer. The driver might not be your end person who you are selling your business to. So I think having that clarity, plus, what I have seen in the space is that oftentimes we say idealistic things that, okay, the air is getting, so this is a product that everyone should use.
Yeah.
But how do you make them use it?
Yeah.
Does the economy supports it? Because a lot of times climate is not on people's top agenda. And if you see, people have so many things going on in their heads, like sometimes so many stress. For example, for drivers, why the drivers adopted e-rickshaws was not because it was environmentally friendly, because it made their lives easier. So I think founders who have that kind of insight, that how do you bring everything together? Those are the people who really succeed when you talk about the climate space.
I think that's a fantastic reading of this landscape, and you're bang on when you say that the end consumer needs to be kept in mind. I think folks who are building in this space are largely also either they are B2B or they are B2B2C. Taking a B2B example, we partnered with a company called Matchlog. Now, Matchlog is a company founded by a great set of founders, Dhruv, Taneja, Harsh. Now, both of these guys, when they started Matchlog, the idea was that we will match back containers getting exported out of India and coming into India at the port to make sure that there are no empty runs. So, for example, in, Mysore and Bangalore are about 120 kilometers away. If there is a shipment coming from Bombay to Mysore, now why should that driver wait in Mysore for 5 days to find another load which could be in the vicinity of 120 kilometers around him? If there is a tech solving for that, it's a clear outcome that the technology is helping him to identify that there is another load or business available in 120 kilometers away, instead of him taking that container thousands of kilometers back to Nhava Sheva port in Bombay, thereby saving this entire carbon footprint in that 1,000 kilometers. Effectively, his carbon footprint has been 120 kilometers from Bangalore to Mysore. So what it does for that manufacturer in Bangalore, A, he's got his truck fast. Two, he working with Matchlog, there is a tech supporting it. It's fast, it's agile. And obviously, when both these things happen, your businesses flourish. Now, on the B2B2C side, take, for example, a company called Tan90. Now, they are manufacturing something called phase change material, which typically are used in multiple applications, food service being one of them. Now, in this, gigantic industry of food deliveries, where folks are ordering on an average at least 5 meals a week from any of the food delivery companies. Now, come summer, you need your ice cream, but if it gets delivered melted, what's the fun? So these guys make these gel packs, again made in the most sustainable formulation, to get this to you. But they knew that unless I build a factory to manufacture this, they could have easily contracted out their formulation to someone else, and they could have said that, look, manufacture this for me and give it back to me, and I will sell it to a bunch of other applications. Because he understood that the consumer preferences are changing every day, if I have to go and use the same use case for multiple applications, I have to be in total control of my manufacturing. Two, I have to make sure that the formulation and everything stays with me. So the end consumer got his ice cream unmelted. He was in total control of his manufacturing. So folks like Somalia, Rajni, all of these guys, when they build businesses, they have kept the consumer in mind. They have not built the businesses on their own and said कि consumer का देखा जाएगा या market identify कर लेंगे. I think end customers is of absolute prime importance.
That's true. Like I was reading this report only which said that often entrepreneurs make this mistake of inflated market assessment. We say ठीक है, market size हमारे पास 100% है, but actually जो paying capacity है जो उसको खरीदेगी वो सिर्फ 10% की है.
बिल्कुल.
So then 100% is not the market size.
Absolutely.
For example, there was this one entrepreneur who is actually giving like all these energy solutions like solar, wind, hybrid. So what he did was he found that कि जो wind turbine manufacturers है वो ज़्यादा से ज़्यादा 50 से ऊपर की एज के हैं. And he thought कि मुझे उनसे compete नहीं करना है because they already have the technology. He built out a platform. So now if you want any energy solution for your home, he's going to give it to you, but with the existing turbine manufacturers. So that's why he's also giving them the business. Similarly, there was this another project by Indian Institute of Petroleum, CSR IIP, Kashipur में they put up a biodiesel plant, room temperature biodiesel, जहाँ waste cooking oil से biodiesel बनता है.
Sure.
And what they did there was उन्होंने unit farm पे लगाई और वही unit से जो biodiesel आ रहा है वो लोग अपने मतलब जो बसेस में यूज कर रहे हैं, जो बसेस स्कूल जा रही है फॉर एग्जांपल, और फार्मर्स आर यूजिंग दैट सेम बायोडीजल ऑन देयर फील्ड.
श्योर.
सो दैट आल्सो सेव्स फार्मर द अमाउंट कि उसे अपनी फील्ड से पेट्रोल पंप तक जाना है, डीजल भर के वापस आना है. एंड द एंटायर मॉडल इज अ सेल्फ सस्टेनेबल मॉडल व्हिच इज गिविंग फार्मर्स आल्सो द इंसेंटिव टू अपटेक दिस थिंग.
वेरी स्मार्ट.
So, I always feel कि वो clarity होना ना, for example, what happened was when Shark Tank came in, there were so many climate startups who came on the Shark Tank. And I don't know like if this is right to, because I am not as experienced as many other people, but I felt that बहुत सारे products को ना placement की जा सकती थी, बस जो खरीदेगा वो बंदा change हो जाएगा. Maybe a corporate could buy them, not the end consumer, but the corporate could buy them. So वो जो thesis है ना कि कौन खरीदेगा, I think that has to be put like really straight.
Shweta, sometimes in the most ideal world, yes, what you're saying has to be there. But the founder has to go through his journey
Correct.
of figuring out what's working, what's not working. And at times you have to make these mistakes. Some of them, and they don't necessarily have to be mistakes. They have to be in a short window. Just deploy this. If it doesn't work, pull out, do something else. There have to be multiple experimentation done before finally founders realize that this is what I'm going to stick with. You're right. In the most ideal world, that's how it should happen. But yeah, that's for the founder and for the markets to respond.
And I think that's where, having like experienced people on the board, for example, as you mentioned, people who have operating experience, investors who has prior thesis, and probably also being close to the, founder community. I think that also helps because we get to see like their case studies, how they have performed. I think that is again a benefit for them.
Most definitely. I think folks who have this operator's lens, they have seen, some 10 odd years of summers, and for them to come and say that, look, this is, in my experience, this will work or this will not work. Now, they don't have to be technical in nature.
Correct.
Right? That could be they could be generalists. For example, management. It could be very simple things on how to build cultures in your organization. Or it could be by the virtue of having that 10 years of experience, can I connect you with someone? Can I open some doors for you? Usually, folks who come with that 10, 15 years of experience have access to certain networks, and by no means they necessarily need to do it. And this is where we, like to tell our founders that, look, while we love your business, involve us. We would like to partake in your business in some way, some shape, some form, irrespective of whatever. There are companies, and some fintech companies, we have ownership as low as 3%. But we actually have weekly meetings internally to figure out और क्या कर सकते हैं इनके लिए, और क्या कर सकते हैं, what else can we do, what can we unlock for them. I think that sometimes becomes extremely valuable, to have folks on your side who've seen businesses. I mean, my family business was into packaging earlier, and the experience of having built that for over 15, 17 years, I was very fortunate to have that experience and sort of use that or leverage on that in my current role.
Ankit, is it true कि whenever I've often heard this thing कि जैसे investor on board लाओगे, you would have to work accordingly the investor. So you might not have the freedom that you have right now because we are in the process, we are doing certain things, and this is a one common statement I've heard. So how true is it? And are you what kind of investor are you? Are you on okay ये करना है, or are you the chill one कि ठीक है?
I think it's $1 million question. But so far, the smartest of founders have never felt the need of anyone else telling them, forget investor. It could be anyone else, your support system telling you what needs to be done. Historically, we've seen that folks who have succeeded never, suno sabki karo khud ki.
Yes.
Right? If that's the philosophy of the founders, I think it's a clear recipe for success. Having said that, our investment style is, look, we are available when you need us, but here are a few things that we think we can definitely do for you. I think what happens is that expectation management prior to investing, or the dating phase between the founders and investors, I think that's an important period for them to figure out whether it's going to be a marriage of constant interference, or is it going to be co-creation of something larger, something meaningful. I think that's something which should be figured out at the very beginning. We do something called a vibe diligence in addition to the paraphernalia of financial and legal and business and corporate governance and all of that. And it has to be both sides. Do the founders vibe with us? Do we vibe with the founders? And over the last 2 years and 25 investments, I think there is enough track record to showcase on how a certain fund works. So far, we've seen that, obviously there are cases where it's not a bed of roses. You do end up in these conflicting situations where the investor feels that you need to go in this direction, whether the founder says that. In the larger scheme of things, if both agree to disagree and mutually so, that's fine. It is what it is.
Yes.
But it's usually depending on also how much equity you have in the company, where sometimes that equity can become a deciding factor on what you get to do in a company or not. But usually investors want to stay off ground management of things, and matured investors, smart investors will figure out when to sort of butt in and when not to.
True. So my last question to you would be, because what you said, firstly tell me कि VC firms के बीच में relationship कैसा होता है? There are so many VC firms operating. So in India, what would be the number if you have to give an estimate कि India में इतनी VC firms हैं?
500 funds,
okay.
I think.
So what is the relationship between the firms, and do you feel कि अगर we have a good harmonious relationship between the VC firms, or probably a platform or something जहाँ पर every VC firm say could share their case studies. Specifically, I'm talking about the climate ecosystem. The climate ecosystem is really new right now, but in sabke paas, you have so much experience in running so many businesses now. So probably अगर हमारे पास एक database होगा सारे thesis का, so do you feel कि ज़्यादा impact आ पाएगा where VC firms are collaborating between amongst each other?
I think that's an incredible question, Shweta, because you're so right. Because this ecosystem is so new, we actually can't afford to have a competing environment around us, especially in a subject like climate, where even I don't know everything. Being a climate investor, I'm also learning from my investments that I've done, from whatever impact that they have created, and obviously what are the examples in the market to see what folks are building. But if we are able to in some way or form collaborate with funds, like-minded funds, I think it's definitely a huge advantage to work harmoniously.
Yes.
Having said that, the VC world otherwise also, is a bit of a bittersweet type of a relationship, because you do need each other. Whether so if something works for my thesis and it is investable, we'll take the plunge. If it doesn't, you still need to pass it on to folks, so that this entire statistic that you spoke about at the very beginning, about the slowdown from $10+ billion down to $2.5 billion, for that industry to expand, for that industry to stay sane, and for it to, for India to become a hub for climate investments, it's so important right now for all of us to co-create policies, co-create informal discussions, do stuff what we are doing right now. I mean, it's an incredible job that you're doing. I think this is the only podcast that I know which actually focuses on climate as a subject. This is what we need right now. So there are folks who are focusing on climate as a thesis. Some of them are doing it purely for the momentum that, climate is so attractive, and it's cyclic. Some years it'll be fintech, some years it'll be SaaS, some years it'll be, AI and generative AI, and DevOps has sort of gained massive relevance right now. But climate is a game of patient capital.
It is.
And for that patience not to run out, and in the pursuit of that holy grail of 100x return on your investment, so important for people to come together to co-invest. We have some massively deep relationships with many funds, both over here and in Singapore, where we co-invest along with them, leverage on each other's learnings, and create this landscape together.
I really hope that, we are able to change the numbers and we are actually able to support, these businesses, because they are doing incredible work. And I always feel climate space mein, if a business succeed, ultimately everyone succeeds. If a business succeeding in the climate space, they're making impact. That impact could be cleaner air, could be cleaner water, could be anything, And when this is happening, people around us are also, uplifting. So thanks, Ankit, for doing an incredible job in somehow, supporting everyone. And I really, really hope that someday we could see a collaboration between all the VC firms in India, where we are viewed as one. Like, where we are viewed as कि India के startups है, ये India की VC firms हैं, and there is a collaboration, there is unity between our firms. Because that's how sharing happens, that's how collaboration happens.
Absolutely.
So thank you so much, and all the best for everything you do ahead. I'm really looking forward to see more impact that you create in this space. And thank you for being here.
Thank you so much for having me on the show. And keep doing this. Please invite all the climate entrepreneurs, whether they are a portfolio or not, or please continue doing this incredible job. Thank you so much.
Thank you so much.